Hi, Jim Yant from Golden Years Advisors, the home of the Kairos formula. It's September and we hope you had a great Labor Day. The City National Rockdale, our friend and partner, just published their September speedometers, so we wanted to give you a quick update. As always, here's the chart. We wanted you to see the big picture first, but now we want to kind of break it down and show it to you in terms of the changes. So first, we now have 6 green positive indicators, and one of the yellows popped to green, and it's really because of 2 things that have made the improvements. We've seen the S&P 500, all the quarterly announcements, profits have continued just to beat expectations. Expectations were low, but profits really made us increase that. Plus, with this very low interest rate environment, housing and mortgages is really taking off. So we went from 5 to 6 greens, and it's really because of those 2 things. Next are yellows. We now have 10 yellow areas, which are kind of cautionary, but 2 things have really been bright spots recently. And it's really the business outlook, both in the US, and you can make similar comments internationally. So we saw both of those tick a bit higher. From a US perspective, both of the August ISM, it's one of the forward-looking indicators. They do a survey of both manufacturing and non-manufacturing. And any number above a 50 means the economy is expanding. And both came in with a very strong 56 number. So that's the change on that front. And finally, we always got to look at what's our problem areas. And we have 4 red areas that have been around. And some of these have been there for forever and will continue. Obviously, we're heading into the political time of the year here with the election, 60 days to go. And that's why we saw some of the early first week wobbles in the market, but the politics, also stock valuations, and then the geopolitical tensions are very high and they remain high. But the one little uptick in improvement is really twofold because of the jobs number last week, the surprising number, first time we've gotten it back under 10% unemployment. Plus, there is still a belief that some kind of continuation of unemployment benefits or payroll protection that they keep fighting over in Washington, something will be passed. The disposable income ticked up. So that's our indicators for the month. We want you to know this is a recovery. This recovery is real. The third quarter of the GDP, the Federal Reserve publishes what they call a GDP now, and we're clearly seeing a positive uptick, strong on an annualized basis. It's going to be in the 20% range and could be 25 or higher. So there's a reason why the market's doing what it's doing. So we're keeping our eye, because like I said, from here, post Labor Day into election, it's usually some scary stuff. So we've got our eye on the ball. Let's be the long-term investors and stay safe. Have a good day.